Hello, everybody. Good morning. My name is Jessica Velasquez with Indiva Advisors, LLP. We're here today with CCIA, bringing to its members and as many folks as are joining us today, bringing you all an update on all of the impacts that COVID-19 or the coronavirus have had on our legislature, impacting individuals and businesses really for the last, over the last few days that have been issued. I am leading off this program here today. Our moderator, Justin, is working on logging in here with some slight technical difficulties, but we'll hear from him soon. Again, I'm going to give us another minute or so as I still see people joining the webinar. But there's a lot to cover here today. Super excited to be here with you all. I hope that everybody can see my screen. I am currently sharing, or you should be seeing the slideshow deck. And again, apologies for the technical difficulties here, but we're going to go ahead and get started. So again, today, everybody, we will be covering COVID-19 tax updates. And our agenda is going to cover what's changing and what's not changing, really to give everybody insight here as to what to expect. And we will be covering several new regulations and laws and legislation passed by our administration that are having a direct impact to employees, to employers, individuals, businesses, and the like. So we'll be covering the Families First Coronavirus Relief Act, the Notice 2020-18, which extended the tax filing deadline, the People's First Initiative, which is a broad program instituted to provide relief for those taxpayers currently in IRS payments, audits, and the like. And then lastly, we're going to cover the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act that was signed into legislation last Friday. I want everybody to keep in mind that things have been moving so quickly over the last few days. A lot of information is still yet to be issued. Regulations giving very detailed roadmaps to both practitioners like ourselves and just the general public are yet to be issued. So a lot of information coming out very quickly. So this is intended to give you an update as to the information known to date. So as we jump right in, what's not changing? I think this is a big question that I've gotten from clients over the last few days with respect to cannabis taxes. So what is not changing and what we've not heard anything from respective state governments is cannabis taxes. So if you are still operating and opening and collecting, reporting, and remitting of excise and sales tax on all cannabis transactions, again, if your doors are open and you're collecting these taxes, nothing is really changing for you. As of now, no state or jurisdiction has issued any sort of moratorium on these types of taxes. So with respect to, again, excise and sales tax, this should be really status quo for all of our operators. Make sure you're still remitting those timely filed returns with your respective state and jurisdiction. But we'll see. This could change in the next few weeks. As we know, in some jurisdictions, cannabis has been issued an essential business, while in others it has not. So again, we could see some change to this in markets where cannabis businesses are open in an effort to assist the industry, but no word as of yet on this. So again, status quo for purposes of collecting, reporting, and remitting any excise or sales tax on cannabis transactions. So let's jump into what is changing. Going into our first Relief Act, so the Family's First Coronavirus Relief Act. This was issued early last week, almost immediately as states began shutting down their respective jurisdictions and issuing stay-at-home orders. But this Relief Act is specific to provide 80 hours of paid leave to employees that have been impacted by COVID-19 reasons. So whether it's for their own health needs or to care for other family members that may be ill due to the coronavirus, or whether they are having to stay at home because their child care centers or schools have been closed, this relief applies to them. So employers, including those that are self-employed, have an available refund tax credit to offset this paid leave that they may be providing their employees. So in essence, what this means for the employer is that they will receive up to 100% reimbursement for that paid leave pursuant to this act. I think another huge benefit here was the small business protection clause. So employers with fewer than 50 employees are not required to issue this paid leave. There are some exemptions here, as noted on the slide, and certainly where the viability of the business would be threatened if the employer did, have this paid leave issued to employees. But again, in retrospect, what this is saying is that employers are eligible to receive 100% reimbursement for any paid leave that falls under this act. I provided some examples here so that it can really illustrate and really drive home what this available credit means. So if an eligible employer paid out $5,000 in sick leave, and it would have otherwise deposited $8,000 in payroll tax to the IRS, including all of the taxes withheld from its employees. So this includes FICA and federal income tax withheld. The employer could use up to $5,000 of that $8,000 in employment taxes that it otherwise would have deposited to pay out the sick leave. So in this example, the employer would only be required to deposit the remaining $3,000 on its next regularly scheduled deposit date. But let's say, for example, that an employer had $10,000 in sick leave and again was required to deposit $8,000 in taxes. They would keep that entire $8,000 in taxes, would not remit that to the IRS, and in addition, they would file for a request of an accelerated credit on the remaining $2,000. The form 7200 is actually just issued this week. So this is where employers can request to get an accelerated credit if they fall in the latter or in the second example shown here. So again, key takeaways on this Relief Act. To take advantage of the paid leave credits, businesses can use those employee taxes that they would have otherwise remitted to the IRS to cover this paid leave. And should those taxes not be sufficient to cover the cost of the paid leave, employers can seek an expedited advance from the IRS by submitting a claim form. Again, that form is now available. It was just issued earlier this week. You can find it on the IRS website. So very key provision. This really applies to all businesses. There has not been an exemption because this is an employment tax credit. It is open to anyone that is an employer paying this paid leave for employees. The second very notable guidance that was issued last week, about 2 weeks ago now, was the extension of the April 15th filing deadline. So in Notice 2020-18, the IRS extended the April 15th deadline. Typically, this includes individuals and C corporations from April 15th to July 15th. So this was a huge push from the IRS perspective, from the Department of Treasury, to give some relief to those tax payments that would have been due otherwise on April 15th. So with this extension also came the extended payment date for Q1 of 2020 estimated tax payments. These are also now extended to July 15th as well. So again, the purpose of this was to issue some reprieve in cash payments that were coming due here in about 2 weeks, and along with filing of those tax returns. Again, hopefully this will give some folks some benefit. The deferment applies to all taxpayers. Again, primarily it's individuals and C corporations that have an April 15th deadline, but certainly any other type of taxpayer that had a 12/31 calendar year date or filing requirement specifically on April 15th are able to take advantage of the July 15th extension. Again, this includes both the filing and the payment. There is some clarity here that it applies to non-corporate tax filers as well as those who pay self-employment tax. Taxpayers do not need to do anything, file any forms, or call the IRS to qualify for this automatic federal tax filing and payment relief. It's exactly that, it's automatic. So nothing needs to be done on your part in order to take advantage of this. States are also providing some tax relief for individuals and businesses. Again, those with April 15th deadlines. Some states are following federal guidance here and also extending it to July 15th, and others are imposing their own specific filing dates. So for taxpayers in California, the state has extended returns due April 15th to June 15th. So something to note. If you don't reside in California, please make sure that you check your state due date, kind of keep track of what they're doing, and if an extension for their purposes will be available. Otherwise, you still may have a April 15th due date with your respective state that's coming up here in 2 weeks. So again, something to be mindful of. So key takeaways for Notice 2020-18. For individuals, while the extension is certainly available, you may not want to wait to get your actual return done. So you can file your return and the payment would still be due July 15th if that's the case. The other reason you'd want to file your 2019 tax return, if you haven't done so already, is the information that you use for direct deposit, should you be getting a refund on your 2019 tax return, is the same information that will be used to deposit the CARES rebate, which we'll talk about here further in the presentation. So again, I think important still for individuals to file their returns. So the IRS has this information available to them, and also your most recent address, as that information also becomes critical to get information back to taxpayers to their most current addresses. For businesses, that additional cash that would have otherwise been due April 15th. So again, that would have been the 2019 final tax return payment, as well as your Q1 2020 estimated tax payment. Please go ahead and use that for your primary business expenses in the next few months. The way to look at it is it's an interest-free cash for 3 months, so make sure to use it wisely. But it has been a great and certainly benefit to get that delay in payment. Again, keep in mind that it's still due, so there still is a due date of July 15th for both the 2019 and Q1 payment, so keep that in mind. And something else that's really key to note here, while the IRS and Treasury pushed out the Q1 2020 estimated tax payment to July 15th, they kept the Q1 payment date the same. So that's June 15th for businesses. Again, something to be aware of, that you still are required to make that Q2 estimated tax payment on June 15th, so you're not issued any penalties or interest. Again, if you're in California, we also recommend filing federal and state prior to that June 15th state deadline, or file a federal extension if you need more time. So again, bringing back the fact that not all states have aligned to the federal extended due date. Every state will have or may have a different date than the federal. This is something to keep in mind, as an action would be required on your part prior to July 15th if you've not filed for California purposes.
Hey, Jessica, this is Justin. Can you hear me?
Another relief act that has been pushed out in the last few days was the People's First Initiative. So what this act covers and what the benefits that it's specifically providing to taxpayers is immediate relief for those that are facing uncertainty over their tax payments. So if you are currently in an installment agreement, in an offer in compromise, and cannot make those payments, the IRS, again, along with the Department of Treasury, is issuing an extended or moratorium, I should say, moratorium on payments associated with these types of actions. They will start beginning April 1st, so that's today. And no, that's not an April Fool's joke. The benefits starting today will run again through that July 15th key date that will keep popping up. But again, they will be issuing moratoriums on those kind of payments, and as well as limiting certain enforcement actions. So think of levies and liens. They are focusing their energy in this COVID-19 crisis. So they're moving their resources to other areas within the IRS departments. And as such, again, they will be limiting certain enforcement actions and providing this moratorium on payments related to installments agreements and offers in compromise. till July 15th. I will say this, if you're receiving notices from the IRS or any other governmental agency during this time period, this should not be an automatic, uh, go to ignore them. You definitely want to address them, certainly bring this up with your tax professional, but you don't want to ignore them. They just won't be, I think, as out in full force um, in reviewing certain types of issues with taxpayers or collection issues specifically with taxpayers. Um, During this period, the IRS will be avoiding in-person contacts. So again, field audits during this time period would pause. They will continue to be doing desk audits or paper audits. So again, if you receive notices, make sure you open those. They may have some timelines and some actions that would be required of you through mail or otherwise. So again, some key takeaways here for individuals that haven't filed their returns for the previous years or are delinquent. Now would be a good time to get caught up on that. Again, more than 1 million households haven't filed returns in the last few years that are actually due refunds. So now would be a good time to go and claim those funds if, again, you've not filed over the last few years. And even if you haven't and you owe it, based on your activity for those delinquent years, there could be an opportunity here for offers in compromise with the IRS to settle all of that um, back tax in a very, very favorable way. Again, definitely contact tax professional to discuss options that you have available, as some of these refunds may be limited by statute. But there is, I think, a lot of opportunity here for taxpayers with back tax debt to really have an opportunity to get that reduced significantly or even discharged in some cases. So good opportunity here. And now we're going to move on to the CARES Act. This has gotten so much news and media and buzz over the last 10 days. This is the big stimulus package that our administration, working along with Department of Treasury and the IRS, will be, and SBA will be issuing a variety of funds to taxpayers, both individuals and businesses, to assist them during this time. The impact to individuals, and I think we'll start here just for a good review, but the bill will provide a $1,200 refundable tax credit for each individual, up to $2,400 for joint taxpayers. And additionally, taxpayers with children will receive a flat $500 for each child. So for a typical family of 4, 2 adults, 2 children, this will be a rebate of approximately $3,400. The rebates will not be counted as taxable income for recipients. The rebate is really an offset against your 2020 tax liability, and it will be refundable for taxpayers with no tax liability to offset. So again, it's essentially, to some degree, free money. There are some phase outs here that we'll talk about. But other benefits that apply to individuals that came through the CARES Act is the waiver of the 10% early withdrawal on any retirement account distributions. Employers may also contribute up to the $5,250 annually towards student loans and those payments would be excluded from an employee's income. And it has also expanded unemployment insurance for workers, including a $600 per week increase. This is in addition to whatever you may be receiving on the state side. So this is a federal inclusion of up to $600 per week for up to 4 months. So huge increase or benefit to those currently seeking unemployment or on unemployment. And the real benefit here is this also applies to folks that typically would not be eligible for this type of assistance, such as self-employed folks, independent contractors, and those with very limited work history over the last few years. So again, some very generous benefits coming down through this stimulus package, really to spark our economy and keep things going and keep some put some money in folks' pockets. Again, continuing here on the CARES Act with respect to the rebate, who is eligible for the rebate? All U.S. residents or citizens with an adjusted gross income of under 7,500, 112,500 if you're head of household, or 150,000 if you're married. You cannot be the dependent of another taxpayer, and you must have a work eligible Social Security number for the full $1,200 rebate. So again, you have to have a work eligible Social Security number, and children are eligible for up to $500. So again, a typical family of 4 is eligible for up to a $3,400 recovery rebate. What about taxpayers with over 7,500, excuse me, with income over 75,000? So there are phase outs associated with the rebate. The amount is completely phased out for single taxpayers exceeding $99,000 a year. So you will, you may receive a rebate, and it would be credited against your 2020, so next year's income tax liability. So for those folks that have or are making greater than 99,000 in that made more than 99,000 where they may not otherwise be eligible, you would still likely get a rebate. Again, it would be offsetting your 2020 income tax liability. And that's what the 30 bullet point here describes. What if, again, your income was above that threshold in 19, but now you've lost your job due to coronavirus? You know, are you still going to get a check? This phase out is what I was describing. Yes, you would still get a check. The rebate would be offset in your 2020 income tax return. So a lot of information here for individuals and qualifications for that recovery rebate check. As I previously mentioned, it's, I think, very key to have that 2019 tax return filed for purposes of having direct deposit information on file with the IRS so that you can get these rebate checks faster, sooner, as well as the most current home address for taxpayers. So what does this mean for businesses? You know, the CARES Act allocated about $350 billion for a Paycheck Protection Program, the PPP. This has been all over the news over the last few days. It's really meant to help small businesses with fewer than 500 people, 500 employees. Under this provision, small businesses may take out a loan of up to $10 million It is limited to a formula tied to payroll costs, and can cover employees making up to $100,000 per year. If the business uses the loan for payroll, interest on mortgages, their rent, or utilities, the loan may be forgiven if, again, it's used for these purposes. So there's not many times in life where we come across, quote unquote, free money. This is one of those times. If you are seeking a loan under this program that will be used for payroll, interest on payments for mortgage, rent, and utilities, it's quite possible that you don't have to pay this back, that all of this would be forgiven. There is some guidelines that you have to follow and some documentation that you would need to provide to the program holder. But again, there is this huge benefit right now where companies can qualify for these loans that may be forgiven at some future point in time. What are some of the other business tax provisions that came with the CARES Act? So employers are also eligible for up to a 50% refundable payroll tax credit on wages paid up to $10,000 during this crisis. So this would be available to businesses that were disrupted due to the virus-related shutdowns, or experiencing a decrease in gross receipts of 50% or more compared to the same quarter last year. So if your jurisdiction has mandated a shutdown of your business, you would qualify for this as well. And if you're currently operating, but your gross receipts are less than 50% of what they were last year, you would also qualify for this. The 50% refundable payroll tax credit is available for the employees retained, but not currently working due to the crisis, for companies with more than 100, and for all employee wages for companies with fewer than 100 employees. Another huge benefit comes in FICA payments, employer FICA payments, and the delay on having those payments made. So employer Social Security tax payments may be delayed until January 1st, 2021. That's at the end of the year, right? So 50% owed, so employer tax payments would be delayed until next year. And you wouldn't have to pay those until the subsequent 2 years. 50% would be owed on December 31st, 2021, and the other 50% would be owed on December 31st, 2022. This is huge. This is a huge, again, incentive for employers to keep people on payroll, employees employed, with this deferral of employer FICA payments for what could be up to, almost 2 years from now. So lots and lots of benefits. The primary purpose of the CARES Act is to keep people working, to keep businesses going, to keep our economy as strong as possible. So all of these incentives are really for the purpose of keeping people employed, our employees going, and our businesses open. So what are the key takeaways from the CARES Act? Again, I would say here really it's staying informed. There's so many changes that are happening daily. I've spent, I would say, a good 15 to 20 hours over the last few days just reading and keeping up with all of the information that has been coming out from the IRS, from the SBA, from other practitioners, as we learn more about all of the regulation that came out in the CARES Act, as well as some other guidance. 888 pages is the CARES Act, and again, we're working as quickly as we can to really take out all of the benefits that are applicable to individuals and businesses, and provide that information as quickly and as best we can. So I'd love to see if Justin is back online. And if not, I am happy to open this up and take some questions that we've received from our folks. So one of the questions here is, are the SBA loans available to plant touching businesses? I worry about the feds loaning and then refusing to give the money. So that's a great question. I've been on the SBA website, and I've looked at the various loan applications. Based on what I've seen, they specifically ask questions, or there is a question that says, if you are currently participating in a federally illegal activity. And if you are, you do not qualify. And that was specific for the PPP, the Paycheck Protection Program. And on here, let's see, it's on top of page 2, where it specifically asks if you are participating in a federally illegal activity. And because plant touching businesses, sale of cannabis products is still federally illegal, I would imagine and assume that they do not qualify. But again, say, is there any information on how independent contractors apply for pandemic unemployment insurance in California? I believe that there is some information out there. I couldn't say with certainty what the process is. What I do know, though, is that specifically under the CARES relief, the additional $600 that would be issued under unemployment, contractors, self-employed individuals, and again, other folks that may not have had long work history do qualify for that additional $600 a week. So definitely something to link into. That's in addition to whatever you might receive from the state. I have another question here. Is it your understanding that cannabis businesses are eligible for federal tax credits under the CARE legislation? Again, I don't believe they would be eligible for the loans or grants under the SBA program. But I do believe that the employer-based credits that we discussed would apply, as it's not related to income tax, it's related to payroll tax. So I have another great question here. What about local business taxes. So federal and states have issued extensions for filings, but what about local business taxes? Some jurisdictions have extended it, but are inconsistent. Is there one central location to find this information and identify what extensions may be available? As I mentioned earlier, I think it's going to be a jurisdiction by jurisdiction type of approach. The federal government has issued their official extensions. I know states are also issuing official guidelines around what, if any, new extended deadlines may be out there. But at the local level, um, I don't know that there's one, repository that has all of that information. I highly encourage you to go to your local jurisdiction, your local taxing office, either through email or a phone call, but have that inquiry. And also check their websites. Most jurisdictions are trying to keep their websites as updated as possible, given our stay at home and social distancing practices. So I encourage you to visit their websites and see if anything is available there. Where can I find more information on how to qualify for the loans? Great question. I encourage you to go to the SBA, the Small Business Administration webpage. They are pushing out as much information and as quickly as possible as they can. I think they've done an excellent job. I visited their website every day for the last week or so, and it's constantly changing. But there is a variety of programs that are available to business owners. Unfortunately, again, non-plant touching, but if you are in hemp, I believe that you would qualify for these programs. If you're a hemp business owner or operator, um, it's likely that you do qualify since hemp is now federally legal under the 2018 Farm Bill. If you have other businesses outside of your cannabis operations, those would qualify as well. So I encourage you all to visit the SBA website. Again, there is a variety of programs available to you. I would really do your research and see where you're going to get the bang for your buck as it relates to these programs. It's not often that we come across free money. I use the term loosely, free money, but to the extent that you use those loans and funds for payroll and any other excludable type of payments, including, again, leases and rents, this would be a great opportunity to take advantage of that and keep your businesses viable, afloat, and to the extent possible, your workers busy. I am looking to see if there is more questions here. I don't see any more questions. I'd love to get this going. Justin, I'm not sure if you're back on here, but if there's any other questions out there, I encourage our listeners to type those into that chat box. I am taking a look here to see if we have any additional questions that we can get answered for you all.
Hey everybody, that does look like that is all of the questions we have. Please use the pop-up window. Unfortunately, we had a little bit of technical difficulties where you guys were able to hear me, but our panelist was not. So if anybody has any last questions, please definitely let us know. All right, well, I think that does it for our webinar. Definitely like to thank Jessica and all of her work. If you guys missed the webinar last week from our risk management committee, please go on our COVID-19 resource page on the website. It's right under resources on cacannabisindustry.org. You can definitely find a lot of resources there. We've posted a lot of our member resources, a lot of our members' events. Definitely take a look at all of that. That's all obviously free for the community to check out. And we will be doing more of these webinars in the coming weeks. So definitely take a look at the emails. If you are a member, a reminder that we're doing our monthly membership calls weekly now. And so definitely check those out on Friday at noon. If you're not a member, please feel free to message membership@cacannabisindustry.org, and we'll definitely be able to walk you through the process and get you hooked up. But definitely thank you for joining us today, and I hope you guys all have a great day.